Hi everybody. I made a previous video that I'm deleting about how to combine your W-2 and 1099 into a 1040 tax return, federal income tax return. This one is updated for 2021 taxes, which you'll pay in 2022. The brackets were raised probably because of inflation, though I haven't verified that they were all raised by inflation. I think the year-over-year inflation from December 2021 over 2020 was around 7%. So that would be the number to verify. I got these off of TurboTax, I think. These are the new numbers. The percentages are the same, and the subsequent cumulative brackets, which will cumulative taxes on the brackets, I will show you, explain later. The reason why I am making a new video is one, because, well, primarily because my speech and explanations were very garbled, and secondarily because there's new brackets. There are some stuff here which are probably not applicable to you, such as the reader tax. That's for Ohioans. I'm not even sure if it's for all Ohioans. And in 2020, the 2020 taxes, which I'm going to show you a glimpse of a section of my tax return, which will not show you any sensitive information besides a few numbers. That also had a item which is not applicable for any year besides 2020, I believe. Anyways, let's get on with it. Also, before I start the actual steps, one more piece of information in the intro is that this video is purely to show how you combine W-2 and 1099, which I haven't really found a good video on YouTube. I haven't looked for a while, but when I looked properly one time, I couldn't find anything that does show this. So I'm not really showing you on the tax forms itself, but I'm showing you an estimator, really, not a calculator. I mean, it works as a calculator, but it's really estimating, because what you would do is you would attach this to a budget or in hours. I have stuff here, this is my information actually, and so I'm not going to show you that, but you would basically attach that to the sum of a table, and you would, as your pay or whatever it is comes in, it would add that to your taxes, and you would find out how much you owe. And this number is your percentage. This is, again, your taxes divided by your 1099. That's what this is actually. So this percentage I put in my tax with self-withholding table, basically. That's what that's for. So let's get on with it. That ends the intro. So first of all, we have a legend. So we have, this is where you enter stuff. This is the result side of the table, deductions, and I have tax deductions and income deductions. In this case, I don't have any tax deductions. Again, in 2020, we had a tax deferral, self-employment tax deferral, which I didn't really understand when I did it, and I paid it back really early. But that's not really the point of the video. Anyways, so first, when you enter your W-2 net, then you enter your 1099. Again, I'll just explain briefly. W-2 is for proper employer relationship, and 1099 is for self-employment for small businesses. I think you would get 1099 is what you get from each of your engagements over $600. Not each per project, but every business that you do business with, they would send you, if you do more than $600 worth of business, they send you a 1099 NEC, I think it's called. There's also 1099 miscellaneous, 1099 interest, which I'm not going to go over. But I think it's becoming more and more common for employees to use 1099s or for the employers to not want them on the payroll proper and 1099 them instead. So that's that. Then we have our first deduction. Income deduction is half of our self-employment tax. So that's 6C16, which is this guy divided by 2. We're going to get into that later. This is our long formula. Then we have charity, which won't come into account unless you're, let me see, do we have any place where we take that into account? Right, because this should supposed to be over here actually, because it's a result, not an enter. Yeah, so charity does come into account when calculating your adjustable gross, because you don't pay federal taxes. Your charity is tax deductible. So you into your charity standard deduction. This is standard deduction in 2020. I don't know. I don't think it has been raised. I don't know. Don't take that for granted. By the time this video gets up, you probably actually have already filed your taxes, hopefully. But I really wanted to redo this video. Anyways, we have our first formula is calculating. It's an easy one. It's really just asking, is all of our income, is the difference between our income and deductions greater than zero or not? So if B 7 to B8 is minus sum of B9 of these guys. If it's greater than that, this needs to change. I'm realizing a whole bunch of mistakes here. It didn't really affect us because I don't have any information here. I'm actually going to enter information here so that we have something to play with. So again, we have income, and our income is greater than our deductions. So we get the difference in adjustable gross. That's the easy enough formula. Again, it's this sum minus this sum. If it's greater than 0, it goes there. If it's 0 or negative, then it's just 0. It's just 0 out of there. Okay. Federal tax. This is our Vlookup application. I'm not going to explain. This is not supposed to be like that. I'm going to expand these. Maybe that was added. I don't know. No, I just dragged it down. I was preparing the video. So I don't need to lock any values, any ranges, because I'm not dragging the formula anywhere. So here we are. I'm going to explain a little bit about Vlookup because of the application. So we're looking where our formula is adjustable gross income minus. Let me actually go into the formula. Get out of here. Zoom bar is annoying. Formulas. Evaluate formula. This is much better for seeing the math. So we want to take our C12, our adjustable gross, minus looking up our gross in our table in F2 through F8. And because we're only looking at one column, we don't need to tell it to do the range of the whole thing. In column 1, true means approximate. So it's going to, how approximate works in Vlookup is it jumps up in position, not in value. I forget whether to get errors if you have a higher value higher up. It doesn't really matter. Right now we're using it properly, or how it's going to work. It's going to work for us, put it that way. So it's going to look for 32,000. It's less than 40, so it's going to go up to 9950. 9950. So the difference, that's the amount that's in our marginal bracket, right? We're not paying, it's not 12% on the whole 32,000. It's 12% on the difference between 32,000 and the next lower bracket. So that's 2332.5. That times our rate. How do you find our rate? The same way we found the lower bracket. We're just going to go to the next column. So it's look up 32,000. And now I have F2 through G8. So I have 2 columns. In the second column, approximate. Looking approximate on this side. it's going to jump over. It's not looking second side, then approximate. So it's jumping up, looking at values here. After it finds the level, the right row, then it jumps over. So it finds 12%. So that's our marginal tax bracket. That's our marginal rate. I mean, that's our tax on our bracket. Then we need to know taxes on all previous brackets cumulative. Not we're going to see I'm going to explain you the other levels how they calculate, because it's not so simple. Again, plus this in the third column, so it's getting us this one. That's our taxes. But let me explain to you how this type of table works, because if you want to build it yourself, because I'm not going to put the sheet in the description, so I want to show you how this works. So really, this cell here is our 0th total, because this is the total on everything before 0. This is the total on everything between 9,950 and 0, which means the whole thing at 10%. So you can see it's calculating 10% times the difference between these two, which means the whole thing, plus the previous total, which just means itself. This one, there we start adding, again, our rate times the difference, plus our previous total. And now you can sort of guess what's going to happen now is, again, our rate times the difference, plus our previous total. And you'll notice this previous total is not 12% on 4555. It's 12% on the difference between these two, plus 10% on the difference between these two. So you have to accumulate. You have to accumulate them. That's what this table is doing. So I'll just show you how it would work if we did. Let me go down to the next level, actually. Equals this times that. If we did that, we would get a lot more taxes. You see, you're getting a lot. You're paying, if you're paying your bracket rate on the whole entire thing, you pay a lot more than each one being accumulated. I can just undo all of that and forget about it. Okay, so that's the federal tax brackets explained and applied. I'll show you what RETA is. RETA is where I live. It's 2.25%. So that's 0.02225 times 8 is our 1099. The reason why I'm not doing on the W-2 is because that's already withheld. I'm calculating what I need to self-withhold in a sense. I call it self-withholding because when I make money, I calculate how much I need I estimate what I'm going to need to pay in taxes and chuck that right away into my savings account. By the way, I use Discover Online, and I get a much higher rate than your traditional Bank of America or Chase or wherever you go. I think you get like a 0.02% or something stupid like that. Right now, with rates as low as they are, I'm talking as of February 2021, rates are very low. So again, I'm getting about 0.5%. When I started, I think they were advertising to me at 1.6. The funny thing is, even when the Fed was talking about 3% and Cash App was talking about 3%, I don't know if I put all my money into Cash App for 5%, or sorry, for 3%, but I definitely made a move of some sort. Since then, since coronavirus, they dropped the rates, which I'm not going to discuss the politics and macroeconomics, so I do have a lot to say on that, but now we're talking about this. Okay, this is the W-2 gross. Well, why do we need to do that? Because we need to calculate our self-employment taxes, which are basically, self-employment tax is the name of it, but what are the taxes in self-employment tax? That is Social Security and Medicare taxes. Not that it's just for all ages, meaning they're taxing you to fund that program. Okay. So here is this big chunky formula here. So this is sort of like the adjustable gross, but it's the taxable, the amount of our income that's self-employment taxable. And this is going to be the tax. This is going to be all of our taxes combined. So just to clear up what it was taxable and what's tax. So this is our taxable income. So now let me go through this. As of 2020, meaning what you would pay in 2021 on 2020, the max Social Security taxable was 137,700, though I haven't checked if that's changed. I doubt it because I don't think Congress passed any Social Security reforms, which again I have a lot to say about, but I'm not going to go there. Okay, so we're asking if these max taxable it minus a gross, which I didn't put. Let me go back. Let me just dump this in here. That's our net. So let me just, I don't know what exactly it would be, but let me assume it's, I don't know, let's say 200. I have no idea. I'm just making up numbers. If the max taxable minus our gross, which in other words means if our gross, if our job pays us the full taxable amount of Social Security or greater, which means you don't have to pay Social Security taxes on our 1099. That's what this is. If, right? If the max taxable minus our W-2 is less than zero, less or equal to zero, which would mean that our gross is greater than 173,700, then we don't have any Social Security self-employment taxable income from 1099 because it was all paid out in our in your W-2 withholding. If not, then we want to take our 1099, if that times this 92.35% is this weird number that they put in your tax returns, tax forms, as a sort of taxable. I don't know why they do that, but you don't do it. It's not 100% of your 1099. It's 92.25%. I don't know why that is. So if that number is less than the remainder between the max taxable and your gross, which means however much is left that they can possibly tax you, if this is greater than whatever is left, then you have to pay then you need to pay full. Then all of it is taxable. If not, then you're only paying whatever is left. Hopefully that makes sense. It's a little hard to explain the math unless you have a visual with like pie charts and stuff, which I could do. I'm not going to do that. I'm going to assume you do understand how that math works. I think I did a pretty good job of explaining that. Okay, so that's how we get our taxable. How do we get our tax? So now this is much simpler. We know how much we have to pay taxes, how much we have to pay taxes on. And again, this number is 9235 because it's not 100% of our 1099. It's 92.35%, I think. So now what's our tax? It's B7. It's our W-2. It's if our W-2 is greater than the max taxable. We're asking this question again. Why? Because just because we found our self-employment taxable, you still pay that the max taxable 137,700 is only applicable to Social Security. I'm sorry, I confused that before. It's only applicable to Social Security taxes. Medicare doesn't. It's not limited by 137,700. So now we're asking again, if our W-2 is greater than, if we don't have to pay any taxes, if this number would have been zero, we're asking basically, right? If our W-2 is greater than or equal to the max taxable, then we're only paying this percentage, the Medicare taxes on the 92% of our 1099. If not, if there's something left taxable either the whole 1099 or part of it, then we're going to, which is this much, this amount, then we're going to take this amount times 15.3%, which is the Social Security tax and Medicare tax percentages looped together. Because I think it's about your Social Security tax is 12%, and the other thing is, what is it? So that's 2.3%. I don't know why. I guess it's the difference between your Medicare tax is this, and Social Security tax is the difference between this and that. Fair enough. And this is simple addition, taking all your taxes and jumping them together, lumping them together. This is your percentage. Now, I'm going to show you a bit